Hey guys, what's up? My name is Ayushkan and you are watching Arjun Ayushkan classes. So, in this video, I'm going to take the revision of insurance claim. Insurance claim. Okay. Now, this chapter is applicable for CA Inter Group 1 accounts and CMA Inter Group 1 financial accounts. Okay. Now let's begin with the concepts. In insurance claims, there are two type of insurance of two types of losses. Firstly, the first loss is please note it down side by side. The first loss is loss of stock. Okay, okay, and the next is loss of profit. Now, loss of stock. The loss of stock is like what we say as accidental loss. Accidental loss. Let's say loss by fire. Just note down the keywords. Loss by fire. Okay. Like loss of fire or loss by theft. Okay. Now next thing. Firstly, I'm going to discuss loss of stock. Computation of claim for loss of stock. Just note down the heading. Computation of claim of loss of stock. See. Firstly, we have to calculate the value of stock on the date of fire. Stock on the date of fire. What we call is closing stock as on the date of fire. The stock which was remaining with the organization. Okay. Next is the calculation of actual claim. Calculation of actual claim. Now I'm going to tell you in detail both the steps. Okay, these are two steps. Uh, let's begin. See, yeah. In case of first step, we have to prepare a memorandum dump trading account for the year for the period of loss of stock. Okay, two opening stock we have to calculate, two purchases, and all uh, direct expenses by sales to gross profit. There will be a 110% given fixed percentage of gross profit on sales. Okay, or on sales or either cost of goods sold. Percentage on sales or cost of goods sold. You can calculate from here. And then by closing stock, here comes balancing figure. Remember, if we make trading account, there will be no balancing figure. But if we make memorandum trading account, there will be 110% closing stock. Oh, sorry, not closing stock, balancing figure. Okay, now What if we are given with the given with the 2 years information, like uh, 2 year information? Firstly, we have to calculate the gross profit ratio of previous year. That is, all the information will be given in the question. Then we will compute the gross profit ratio, and then we will compute the gross profit on of this current year. Okay, of this current year. Then we'll apply it on sales. Then we will compute closing stock. Okay, now calculation of actual claim. For that, first you have to just a second. Firstly, you have to calculate the value of damaged goods. How we will calculate it? It will be calculated as closing stock minus salvaged goods plus firefighting expenses. Okay, FFE, firefighting expenses. Okay, then we will calculate the net claim. The formula for the same will be the insured value divided by insured value divided by closing stock into damaged goods. Okay, but if the closing stock is smaller than the insured value, in that case, the insured value will be the net claim. Okay, I hope you got it. There's no much points left in this topic, so I'm starting with next topic of the chapter, that is loss of profit. See, write down the heading: loss of profit. Just understand the meaning. That is, a fire may create a consequential loss to a business over and above the instantaneous damage of stock. Okay, it disrupts normal activities for some time, during which the business has to go on or not playing to go on paying standing charges like rent, salaries, etc. without any effective return. There will be no return in such cases. It also causes a loss of profit, which the business could have earned it normally if normality was not disturbed by the accident. If the normality was not disturbed by the accident. Okay. Now there are certain terms in loss of profit, like standing charges. I hope you got the meaning of loss of profit. Okay, like standing charges. Next is indemnity period. Next is indemnity only. Okay, I'll explain you the meaning in short of all these terms. Next is standard turnover. Next, annual turnover. Next, this is a very common point, a common word, net profit, and also next, gross profit. Now, what are standing charges? These are the fixed overheads like rent, okay, rent, rates, taxes, salaries, etc. Okay, including depreciation, everything. Indemnity period. The period uh, commences at the date of damage and ends not later than the stated number of months thereafter. This is the maximum period in respect of which the insurers are liable and should the business recover and becomes normal before the expiry of such period, liability at once ceases. Okay, indemnity, it is the difference between the actual profit earned after damage and that should have been earned had no damage occurred. Okay, standard turnover, the turnover during the period in the 12 months immediately preceding the date of damage, which corresponds with the indemnity period. Okay, annual turnover, it is a period of 12 months immediately before the date of damage. Okay, and you know net profit and gross profit. Now, computation of claim under the loss of profit. Computation of claim. See, computation of claim. Firstly, we have to step one, calculate short sales. Now, what will be the short sales? Standard turnover minus actual turnover, then increasing trend plus the trend. Okay, second step, GP ratio we have to calculate. Okay, now GP ratio will be calculated how? Will be calculated as net profit plus insured ones standing charges divided by sales into 100. Step 3, we have to calculate this GP on short sales. Okay, it will be called loss of profit. Step 1 into step 2. Okay, step 4, computation of additional expenses. It will be minimum of A part, actual expenses or B part, GP on additional sales generated by additional expenditure. Okay, by additional expenditure. Then or C part, additional expenses into net profit plus insured standing charges divided by net profit plus all standing charges. Or you can compute this in a different way, that is sorry, additional expenses into GP on annual turnover divided by GP on annual turnover plus uninsured standing charges. Okay, then the least of the following. Then step 5, I suppose. No, step 5. It's going to be complete. Step 5. it will be total loss of profit. It will be equals to step 2, no, sorry, step 3 plus step 4 minus savings, if any, made by the organization. Okay, step 6. Now it's the last step. It will be net claim, or you can say insurance claim, equal to gross claim into policy value or insured value divided by GP on annual turnover. Okay, I hope you got it. Now, what's a gross claim? What I mean of gross claim? It's the total loss of profit. Okay, here we've finished with the chapter. If you have any doubt, then do comment under the video. Okay, I hope you got it. So thank you. Take care. Bye bye. And do like, share, do like, share, subscribe my channel. Thank you.